If you're holding Bitcoin, XRP, or any major altcoin right now, you need to hear this. The US Senate just killed the bill that was supposed to give crypto legal clarity. And while Congress heads out for a 4-week vacation, the SEC just called an emergency meeting for this Friday. In the next few minutes, I'll break down exactly why the Clarity Act failed, what the SEC is about to do, and what this means for your portfolio this month. Before we get into it, do me a quick favor. If you want daily, no BS updates on US crypto law and what institutions are actually doing, hit subscribe and the bell right now. This story is moving fast and you don't want to miss the Friday SEC meeting update. Here's what happened on Capitol Hill this week. Senate Majority Leader John Thune tried to force a vote on the Digital Asset Market Clarity Act. Everyone just calls it the Clarity Act. The whole point of this bill was simple. Finally tell us who regulates what. Is it the SEC? Is it the CFTC? What are the rules for exchanges, token issuers, and for you as an investor? But to move forward, they needed 60 votes to break a filibuster. They didn't get them. So the vote officially failed right before the Senate broke for August recess. That means national crypto legislation is now frozen until mid-September when lawmakers get back to Washington. Why did it fail? 3 big fights are still unresolved. First, ethics rules. How do we stop members of Congress from trading crypto on insider info? Second, stablecoin yields. Should platforms be allowed to pay you interest on stablecoins? Third, the turf war. Who gets final authority, the SEC or the CFTC? Because of that deadlock, prediction markets just slashed the odds of this bill passing in 2026 to under 20%. Now here's where it gets interesting. While politicians are fighting, Wall Street is buying. Just last week, US spot Bitcoin ETFs saw over $850 million in net inflows. In 7 days. BlackRock, Fidelity, the big players, they're still accumulating. What does that tell us? Institutions see this legislative delay as a pause, not a death sentence. They're betting that the US has to regulate crypto eventually. And they want to be positioned before that happens. So we have total disconnect. Congress is on vacation. Wall Street is stacking SATs. And stuck in the middle is the SEC. And the SEC is not waiting. According to an official Sunshine Act notice, the SEC just scheduled a public meeting. Date: Friday, August 14th at 10 a.m. Eastern. Agenda: vote to propose brand new rules for digital asset investment contracts. On Capitol Hill they're calling it Reg Crypto. Translation: if Congress won't give us a law, the SEC will write its own rules. They want to create a brand new, tailored offering regime specifically for crypto assets. Why the rush? Analysts think the SEC wants to get its framework on the books before Congress comes back in September and tries to limit their power. If this proposal passes on Friday, token issuers and crypto exchanges could be forced to comply with new disclosure and registration requirements way sooner than anyone expected. This is a power grab. And it's happening this week. So what do you do with this information? Short term. Expect volatility for the rest of August. Without a law from Congress, the legal status of secondary market trading is still unclear for the next 4 weeks. That uncertainty creates wild price swings. But medium term, if the SEC proposes a clear, workable path to registration on Friday, that could actually trigger another wave of institutional buying heading into September. Clarity, even from the SEC, is better than no clarity. Bottom line, Washington is racing against the clock. And the decisions made this month will shape US digital finance for the next decade. Question for you. Do you think this SEC emergency meeting will help or hurt crypto prices this weekend? Drop your prediction in the comments. If this update helped you, smash the like button to help it reach more people. Thanks for watching BlockAlpha. Stay informed. I'll see you in the next update.